This is Nightly Business Report with Sue Herrera and Bill Griffin.
Good evening, everyone, and welcome to this special edition of Nightly Business Report.
Yes, tonight we're going to look ahead to the second half of the year to try and figure out what is in store for investors in those months ahead.
Well, the market so far this year has been full of fireworks. From a rally in January to a sell-off in February to a number of twists and turns since then. The big question is, what happens next? Dominic Chu takes a look.
The first 6 months of 2018 didn't really play out at all like the first 6 months of 2017. While the broader market staged a relatively calm and steady rally all of last year, the same cannot be said this time around. But that isn't scaring some experts when it comes to the second half of this year.
Under the surface, small cap leadership, more aggressive areas are doing really well with the Dow flat and the S&P about 3%. We think in the second half of this year can continue to be upward and the bulls should be in control here.
There will be a number of key drivers to watch as we head towards year end. But one of the most critical remains the health of corporate America and its ability to produce profits.
I think in the second half, it's going to be mostly earnings that's going to really impact where stocks go. Stocks tend to follow earnings.
Given all the uncertainty around President Trump's trade policies and the medium to longer term effects on the economy, investors will be watching and listening closely to any commentary from CEOs and CFOs during the upcoming earnings season about potential impacts to business. But if the economy can manage to maintain momentum, even pick up some steam, some parts of the market may do better than others.
When the GDP gains 3% or more, so you have a good economy, value tends to do much better than growth. So in our opinion, it's kind of a contrarian play, but with a stronger economy like we expect the second half of this year, it could finally be time for value to outperform growth the second half of 2018.
However, some sectors may appear less attractive than others do.
We've really avoided retail, and I think energy is tough because you're so dependent on the commodity price. But retail in general has been a tough place to be. I get worried about all the impacts that Amazon's going to have on many businesses. So I would avoid those two sectors.
Those are just a handful of the topics facing investors in the coming months. Add to that the upcoming midterm elections in Congress this fall, and you get what could be a recipe for more market volatility to finish the year. For Nightly Business Report, I'm Dominic Chu.
And of course, the tech sector has been beloved by investors, leading the market higher both this year and last. And as Josh Lipton reports now, some key events are on the agenda for the second half this year.
Tech is among the best performing sectors so far this year. So what should investors expect in the second half? Here are three predictions. 1, tech IPOs stay strong. We had a solid first half of the year for tech IPOs. Dropbox, Spotify, and DocuSign, to name just a few. That trend continues in the second half with a pipeline of prospects. SurveyMonkey confidentially filed for an IPO. Venture investors also say to watch software firms like Qualtrics and Aptus. Investors have been eager to buy tech companies, especially ones selling cloud-based services. 2, Apple successfully navigates trade tensions. Tim Cook will introduce new iPhones in the fall, which need to sell well in China. But investors might worry that Apple could now get caught in the crossfire as the trade battle heats up between the U.S. and China. Here's what some are predicting. Apple's China business won't be seriously impacted. Ultimately, Beijing doesn't want to hurt the iPhone maker, with more than 1 million Chinese working in some way on Apple products. 3, Amazon picks Indianapolis as its new headquarters. The company is deciding what city will host its second corporate headquarters, and it's now visited all 20 finalists. Indianapolis could be a serious contender. Centrally located, with access to several interstate highways, a plus for the e-commerce giant. It's got a strong university system and a state economy that's stable and business-friendly. One possible hurdle, a relative shortage of the kinds of skilled workers Amazon wants right now. But with this new headquarters, Indy could attract them from Chicago and the rest of the Midwest. For Nightly Business Report, I'm Josh Lipton, San Francisco.
So how should investors prepare themselves for the rest of 2018? Joining us for a strategy session is Jim Paulson, Chief Investment Strategist with the Luthold Group. Good to see you, Jim. Thanks for joining us.
Good to see you, Sue.
We certainly have seen twists and turns and volatility in the first half of the year. Do you expect that to continue? What does the market complexion look like to you?
I kind of do. I think the primary problem all year from my perspective has been that bond yields have been too low and stock valuations have been too high. We're doing a job on that. You know, we raised yields now. They're a lot better than they were when we came into the year. And PE multiples, or the valuation of stocks, have come down primarily because market's been flat while earnings have gone up. I just think we have more of that to do yet. And in the second half, I think we're going to struggle with maybe a little slower economic growth, which could challenge Wall Street earnings estimates a bit. But the problem is it might not slow enough to really stop the Fed from continuing to raise interest rates or stop wage and consumer price inflation from continuing to rise. So we may have a little stagflation, which is going to, I think, continue to create volatility. I'm not looking for a bear market, Sue. I don't think that's the case. But I think more volatility, or maybe even lower lows yet this year, could be a distinct possibility.
Let me get you to put a little more finer point on that then, Jim. Clearly the Fed wants to raise rates maybe even 3 more times this year. You see 3.5% on the 10-year by the end of this year. Will that be good or bad for stocks in your view?
Well, I think the rest of this year, if that happens, Bill, I think it'll kind of keep a lid on the upside for the stock market. But against that, you got to remember earnings might go up, you know, at a 20% annual rate the rest of this year. So they can probably withstand higher rates over that period of time. I do think, my guess is that sometime this year, either at year end when stocks are a little cheaper because earnings go up and stock market doesn't do anything, or we have a bit of a panic yet this year, I think that might be a really great buying opportunity to enter for maybe pretty good returns next year in 2019.
And let's talk more about that, because you've given us some strategies for investors. First, you say overweight the inflation sectors like energy and things like that, correct?
Right. I think, Sue, you know, we got a 3.8% unemployment rate, and if we grow at all, we're going to continue to aggravate inflation pressures. If you also weaken the U.S. dollar in the second half, which I think could happen, I think that'll push up not just oil, but other commodity prices. And I think you're going to want to own some of these that really benefit from that. The energy's already doing well, but I think material stocks, industrials also could enter the fray if that happens.
Jim Paulson. Jim, thank you so much. Jim Paulson is with the Leuthold Group. Bill?
To the housing market now, where prices are rising, as you know, and inventory is falling. And that has been frustrating potential buyers all across the country. As Diana Olick reports now, that frustration may linger.
Today's housing market is pricey and competitive, and it's likely to stay that way for the rest of the year. But things may be easing up on a couple of fronts. First, mortgage rates. They rose sharply at the start of this year, but seem to have settled lately, albeit at that higher level. While rates are unlikely to fall and could inch up a little bit more, experts are not expecting as big a leap as in the first half of this year. Home prices are still hot, rising faster than incomes, but the gains seem to be easing up ever so slightly as buyers hit an affordability wall and the supply of homes for sale increases a little bit. Supply will be key in the second half. Home builders will continue to ramp up production, although not as quickly as needed and mostly in the move-up, not entry-level category. Costs are already high for builders, and a potential trade war would only make that worse, with those higher costs passed on to consumers. One thing is certain, demand for housing will only increase as a stronger economy gives more and more renters buying power. For Nightly Business Report, I'm Diana Olick in Washington.
So far in 2018, the airline and the auto sectors have underperformed the market as a whole, and there are concerns that that will continue as the industries fight headwinds in the months ahead. Phil LeBeau has more.
The future of autos exported and imported to the United States and how much they'll be taxed will be a focus for auto investors this summer and fall. Daimler has already said its earnings will be lower due to tariff costs. And others could follow if President Trump pushes through higher tariffs, which raises another issue. Will tariffs drive up prices and hurt sales? And speaking of sales, the biggest question for investors will be whether Tesla can sustain a higher delivery rate for the Model 3. Will Elon Musk have to raise more capital for his company? For airlines, the big issue, jet fuel prices, up 50% in the last year. Could they go higher? That would push up costs and could prompt some carriers to cut flights in certain markets. Finally, will demand remain strong and planes stay packed? The robust economy and high consumer confidence have a record number of people looking to fly this summer. Will that continue this fall? That's a big question facing airlines and their investors in the second half of this year. Phil LeBeau, Nightly Business Report, Chicago.
So as you plan your summer vacation, there's an emerging battle between illegal short-term rentals and the law. Morgan Brennan spent months investigating this CNBC exclusive, and that's next.
An emerging turf battle is underway between cities and upstart tech companies like Airbnb that have been capitalizing on the Wild West landscape of the so-called share economy. It's valued at $31 billion, Airbnb is, and it's currently worth more than most of its publicly traded hotel rivals. But gigantic growth means big growing pains at the same time.
It sure does. And Airbnb unwelcome guests is our investigation into that clash between illegal short-term rentals and restrictive regulations. Airbnb says it has worked with cities around the world to craft reasonable regulations, but not in Miami Beach, where the fight has no end in sight. Morgan Brennan has that story.
It's 9 o'clock on a Saturday night, and we're riding along with Miami Beach code compliance, on the lookout for illegal short-term rentals.
And what are you looking for tonight?
Hopefully we can establish contact if it's occupied and determine whether it's a violation or not.
Code compliance officer Vijma Maharaj has seen it all. Large, noisy late-night parties in residential neighborhoods. Commercial video shoots with scantily clad women in a home investigated for short-term rental complaints.
I'm with the City of Miami Beach Code Compliance.
And unwitting tourists who say they unknowingly booked Airbnbs in prohibited areas.
You shouldn't be able to do this. This is messed up.
All captured on body camera videos recorded over the past 2 years.
Hello.
Some are so blatant, as these house rules show, what to do if someone asks. They're told to lie by saying they're a friend, and certainly don't mention they rent this place.
You're not allowed to rent this house for less than 6 months and 1 day.
Everybody has to leave.
This party needs to clear up.
Miami Beach, one of the country's most popular resort destinations, is also a popular city for short-term rentals. It's also one of the most aggressive in the country for going after illegal rentals, with stiff fines. Only certain sections of the city, like South Beach, permit rentals less than 6 months and 1 day. Large portions of the residential sections of the city are not permitted.
And you would say, when you hear that story...
To Miami Beach Mayor Dan Gelber, the issue is clear-cut.
They may work in some places, but they don't really work here, because at the end of the day, it's not the mom and pops that we're seeing here. We're seeing commercialized, predatory companies that are trying to commercialize our residential communities.
Predatory seems like a really strong word. What do you mean by that?
It is predatory because it's not about a mom and pop or a grandmother wanting to bring in a college kid to make them chicken soup at night. It's people taking very nice properties, buying them, and turning them into essentially a flop house.
Gelber, a former prosecutor and Florida state lawmaker, says Airbnb and other home-sharing platforms must abide by the law.
Have you spoken to Airbnb or any of the other companies that operate here?
I've spoken to some of the representatives before I was elected. I'd like to send them a message. I'd like them to be corporately responsible. I'd like them to do the right thing.
Why do you think they haven't done that?
Look, these are not charities. These home-sharing platforms, they want to make money.
From South Florida to Southern California, short-term rentals have turned some neighborhoods into next-door nightmares. Different cities encounter different problems. Across the country, in Los Angeles, we found large homes routinely advertised on Airbnb for mega parties, prompting noise complaints. and a proposed ordinance to restrict short-term rental use. At a loud party in Millbrae, California, in the San Francisco Bay Area, shots rang out. Guests seen on surveillance cameras running down the street. Airbnb says it has zero tolerance for this type of behavior and permanently banned the guest. Airbnb says these incidents don't represent the overwhelming number of satisfied hosts and guests in 81,000 cities and 191 countries, and it has successfully worked with lawmakers around the world. Back on the streets of Miami Beach, it's not long before we roll up on a group of vacationers. The building has telltale signs of an illegal rental. 2 of the units advertised on Airbnb have lock boxes and keypads.
Do you live there?
We do.
How long have you been living there?
We're actually just rented the Airbnb.
The guests say they booked the Airbnb for 2 nights through a host named Rachel. It's the same Rachel in this listing we found online.
Are you guys surprised to hear that it's not legal here?
Actually, yeah, because it's something that's, it's just out there for people.
It gets even more interesting when Officer Maharaj calls Rachel.
I was just speaking with occupants here and they told me that they rented your unit. The city has an ordinance which prohibits short-term rental. Are you aware of this?
Oh, they're actually my guests or my friends.
Oh,
so they're just...
They told me
they're staying in my apartment.
So are they staying here for free? Is that what you're telling me?
Yes.
I can get them on the phone to talk to you right now because they just told me they paid approximately $950 for the weekend and it was rented via Airbnb.
Oh, no. That shouldn't... No. Let me check with them again.
Hello, sir. I think you guys had a free apartment. Rachel told me you guys are friends and you didn't have to pay to stay there. Is that true?
That is not true.
Okay, well, she's on the phone. Maybe she wants to give you a refund?
Rachel says she's associated with a company called Vakeo, which is well known to city officials. Vakeo is a New York-based management company that rents properties and then leases them via Airbnb and other rental platforms to short-term tenants. Both Vakeo and the property owner, who was staying in a downstairs unit, were each issued a violation notice which carries a $20,000 fine. The owner didn't want to talk to us. The city's fines range from $20,000 to $100,000 for the 5th offense. The total fines for Vakeo and its co-founders amount to $700,000 at 4 properties in Miami Beach. The city is on track to conduct more than 1,000 investigations into short-term rentals this year, up from more than 800 in 2017. Total fines so far this year, $2.4 million. But only about $183,000 has been collected.
Right around here.
At another illegal Airbnb advertised by the same host, identified by the city as Rachel Perea, Officer Maharaj walks in to find out what's going on.
This building is located in a zone where it's prohibited to rent out an apartment for less than 6 months and 1 day.
Oh, wow.
The college students tell us their group of 6 rented the apartment for $1,279 for 5 days. The apartment is clearly set up for short-term guests.
So this is the other bedroom. This is a 2-bedroom apartment. It supposedly sleeps 8.
This unit and a second one in the building now have together racked up 4 violations. Both were leased by Vakeo. The unit's owner says he didn't know anything about them being used for this purpose. After we contacted Airbnb, the company said it's given the students a full refund.
These properties on Airbnb...
We wanted to get some answers from the Airbnb host, Rachel Perea.
I'm sorry about that. I'm really sorry. I can't take this call right now.
Vakeo's COO and co-founder, Isabel Burney, says her company has since gotten out of the leases where these short-term rentals aren't allowed and has not paid the $700,000 in fines.
Our lawyers are resolving that. They feel like it's unconstitutional the way they're finding. There's many different groups fighting the city and it hasn't been resolved. They're not collecting the fines that they're issuing.
Are you just gonna wait and run out the clock and see if laws change in Miami Beach?
Right now, we're just not accepting any homeowners in Miami Beach. We get about 30 to 50 requests a day to lease property on our website.
Do your investors know that you have these outstanding fines in Miami Beach?
Our investors are fully aware of everything going on, and they know that we stuck our neck out for a lot of owners, and that we are tackling a really difficult problem in general with our property and with basically accepting single-family homes.
Are you saying that you will continue to break the law on some of these properties until
I'm not saying that
rules
we
change?
want to fight and that we're going to enter properties now knowing that the law has changed and we're not allowed.
She confirmed that Rachel Perea is still one of Vaqueo's hosts.
She said the renters were friends, that they weren't paying anything, which was false. So she lied to code compliance. Are you aware of that?
No, but how do you know it was false? Because I do let friends and family use our places.
These are the violations. This is the customer receipt.
Yeah, I mean, she probably was just put on the spot, and she was probably scared, and I wasn't aware.
Responding to our investigation, Airbnb says it has removed listings associated with Vaqueo from the site. In an interview at Airbnb's San Francisco headquarters, Chris Lehane, the head of global policy, strongly defended the company's track record.
I've yet to see a program being run by any mayor, any elected official, that in this time of economic inequality is generating $6,100 for a typical middle-class family, all without the expenditure of a single taxpayer dollar. That is what Airbnb is about at its core, trying to use technology to create economic empowerment.
Should Airbnb be responsible for what is, in that market, illegal activity on the platform?
I think what seems to me that would be a common sense solution for Miami Beach, happy to do this if they actually really want to sit down and have a constructive conversation, is you could take that 35% of the city that's a residential area, make that an exclusionary zone. Allow the activity to be able to take place in the 65% of the city that's actually explicitly zoned for this type of activity.
In the meantime, you have illegal listings on your site.
Well, first of all, I think if you actually look at the underlying law in the city, in Miami Beach, right? The Miami Beach allows for this activity to take place. $20,000 fines on someone making their home available a few times a year to actually help make ends meet. Does the city actually want to make this work as well as possible for as many people as possible?
He says Airbnb has more than 400 partnerships with places around the world, including the proposed restrictions in Los Angeles.
If you had to grade Airbnb, what grade would you give the company in terms of complying with regulations, broadly?
I appreciate the professor asking the question. What I would say is that with those cities who actually want to engage in the conversation, we deserve a really high grade.
But what about the cities who don't?
That's like asking me to, how am I going to do on a test when the person grading the test is actually going to even give the correct answers and incorrect result, right? If you have a teacher who's trying to rig the process, it's impossible to be able to answer the question about how you can do it.
In markets like Miami Beach, where you do have illegal listings on Airbnb, why not block those?
We've worked with cities all over the country. We put in something called a pass-through registration system. Cities can determine whether something is in the permissible area or not.
Lehane takes aim at the hotel industry, Airbnb's competition, which he says has been shown to be closely aligned with regulators.
Miami Beach hasn't been interested in doing that because Miami Beach, up to this point in time, has just not had a serious desire to really want to engage on this, because at the end of the day, as the information that has come out reveals, they're effectively working hand in glove with the hotel industry, which is incredibly powerful, and a hotel industry that really doesn't want to see everyday people to be able to use their homes to make extra money.
The American Hotel and Lodging Association tells us that instead of supporting common sense regulations, Airbnb has opted to deploy a massive obstruction campaign of dirty tactics, deceptive messaging, and personal attacks against anyone who raises a concern.
Kind of rebuilding effort here.
McGill University assistant professor David Walksmith, who has researched Airbnb regulations around the world, says Miami Beach is not atypical.
Miami Beach has been a little more aggressive than some other cities, but I would think of it really that it's the kind of the front of a big wave. You can't throw a rock in this country right now without hitting a city that's moving to regulate short-term rentals more aggressively. And so Miami Beach is kind of at the forefront of that, but they're very much in line with the trend that's happening across the country and actually across the world.
Among Walksmith's research, primarily done through the university, is this 2018 report commissioned by the hotel industry that found 45% of all Airbnb reservations in New York City last year were illegal. Airbnb calls the report deeply flawed and inaccurate.
Bottom line, this is a company that's not going away. How does it play nice with others?
Well, I think that right now what Airbnb needs to do as a company is to come up with a strategy for being just a little more proactive with the way that they're willing to enforce regulations, right? Lots of cities are passing laws, but they have a hard time enforcing those laws. I think that Airbnb's current business model is not compatible with the kind of the recognition that short-term rentals are not broadly in the public interest in cities.
Clearly, even with an aggressive enforcement team in Miami Beach, the illegal rentals remain hard to enforce. Just look at what we found when we returned to the same apartment that had been cited 2 weeks prior. A group of college students on spring break who told us they had no idea they were staying in an illegal Airbnb. For Nightly Business Report, I'm Morgan Brennan.
Whether it's Airbnb or Booking.com or HomeAway, which is owned by Expedia, all of these companies have had clashes to varying degrees with regulators in different cities. Officials in many of those cities across the country, whether it's Boston or Los Angeles or New York, they say there are issues. That said, we found in our reporting that the company brought up the most frequently is Airbnb.
That will do it for us. Thank you so much for watching this special edition of Nightly Business Report. I'm Sue Herrera.
I'm Bill Griffith. Have a great evening. Happy 4th of July. We'll see you tomorrow.